So far it's looking pretty good. The data that came out at 8:30 was all positive. We had a big drop in initial jobless claims, 14,000 to 351.
We are really moving off that 400,000 mark, which we couldn't seem to budge from for months.
Yeah. So right now the 4-week moving average stayed flat. So that's around 356. You know, we'll take that. That's not a bad sign. Also, PPI got that. That was actually, the headline was a little bit less hot than expected. It went up about 0.4%.
And that's the producer price index.
Exactly, yeah. And that obviously influenced by higher energy prices there, but the core stayed the same at 0.2, which was what was expected. And then we had the New York Fed's March gauge on manufacturing, which was strong, and that was better than expected. It was up a lot. But there's a couple of things in that report that were a little bit concerning.
Like what?
Well, there was a drop in the new orders, drop in shipments. The good stuff was that employment and work week both went up. The other thing that I would point out in this report, too, that was a little bit concerning maybe for businesses, and you can extrapolate this out maybe to earnings, is that the prices that they're paying for stuff is going up, and that's probably energy related, but the prices that they're receiving for their goods went down. So to me, that suggests that there might be a little margin pressure issues there.
And payroll is going up too. So something's got to give there. Employers are going to have to. They can't control the prices that they pay. They can't control what things cost. So. Or what consumers pay for their products. So those are probably the jobs and prices.
We're not going to be able to hire more people.
We're talking about employment and inflation.
Right, and one of the things that we've seen too with companies in terms of trying to meet some increases in demand, they're using temps. And so that keeps their costs low there. We saw in February, the temp hiring was up like 40 or 45,000, I think. Relative to how the market reacted, it's also an interesting dynamic, I think. There, the market, this was good data. The market, in terms of the futures, basically remained flat from where they were. So the Dow futures were up about 25 to 28 points. The S&P futures were up about 4. And I think the interesting aspect to this is this sort of parade of better data sets up the tension between are we going to get more quantitative easing for the Fed? And the more that we see this better data, the more it suggests that we're not going to get more QE, which isn't necessarily great for the stock market because the bulls have really, fed off of that easy money. And so I think you're seeing a little bit of that reaction, sort of tempered reaction in the futures this morning because, there's not going to be necessarily more free money flowing into the market.
But if the recovery does accelerate, the need for that QE3, and of course that's what the Fed is hoping for. It doesn't have to use those extraordinary measures.
Right, but one of the things, if what we're seeing though, and just jumping back to what we were just talking about, is that earnings growth has slowed sharply. And usually stock markets, stock prices key off of the pace of earnings growth. And so you might be seeing more of a focus on fundamental stuff like that as opposed to, how much more liquidity is our central banks going to pump into the market.
John, you say usually, but not lately. The market has been ignoring whatever slow earnings growth you're talking about.
Right,
so
it completely
they're not listening to John Shipman.
No, well, eventually that stuff will have to reinsert itself. When the Fed starts to pull back a little bit, God only knows when that's going to be.
And of course, oil prices remain a headwind that a lot of people say could, kind of thwart what we're seeing in the momentum in the beginning of the year.
Right. There's interesting stuff happening there. Yesterday, we saw a big drop in oil prices. They were down about 1%. Those have stabilized. They're up a little bit this morning. Huge drop in gold yesterday. Big drop in U.S. Treasuries. The yield on the 10-year is over, 2.3% now, which is moved up like 30 basis points in a day and a half.